Thank you very much, Michel. Hello, everybody. So I will present you the result of years and years of experience in the field of infrastructure construction and use. The idea is to understand what is the use of infrastructure and to differentiate between what is cost and what is investment. So the philosophy is that a good infrastructure brings good money. Infrastructure, the public investment should not be viewed merely as an expenditure. Similar to the private sector, investment signifies the expectation of a return on the capital invested. However, the returns from public investment are less straightforward to demonstrate compared to those in the private sector, primarily because there is no precise accounting system to track the outcomes of this investment. Secondarily, because if an infrastructure creates opportunity to develop businesses, it is not automatic. The lack of infrastructure impedes development, but the fact to have an infrastructure that doesn't create immediately money. So you need to analyze project by project. What are the consequences of the project you have built or you will build? So first, what is a good infrastructure? Then we can refer to the World Economic Outlook 2014. IMF said, infrastructure refers to a basic structure that facilitates and supports economic activity. This is the key point. In this chapter, the term is used to denote what economists refer as core infrastructure, roads and other transportation facilities, power generation and other utilities, and communication system. In fact, when you look at what is covered through that, it is simply to reducing production factor cost, full stop. And the consequence of that is that you normally, if there is no catastrophic event, you increase GDP. And if the country is properly managed, increase of GDP brings fiscal revenues. And then the idea is to make in parallel and to compare the cost of the infrastructure and the revenues provided by the increase of GDP resulting from the reduction of production factor cost. It is very simple, at least to say. To do the job is more difficult. Other purpose of a project, improving the well-being of the population, that gives indirect benefit to the activity. It has not been studied in detail in this software. It increased consumption, certainly, but I have no clear evidence to use this link between increasing well-being and GDP. Protect nature and environment. This is something else. It is crucial to avoid future expenses. But in fact, it is like an insurance. You pay immediately to avoid potential extra expenses in the future. And the model should take this approach into consideration. The environment investment are in fact insurances. Lastly, developing social and sovereign activities. This is necessary, but difficult at our level to evaluate. So we shall concentrate on the first point, reducing production factor costs, and the third one, protect nature and environment, and for future avoided cost avoided. So now, what is true, what is not true in this infrastructure environment. Myth, infrastructure is a sunk cost. In reality, many projects generate net fiscal revenues. I shall come back after on the word net. Other myth, it is impossible to foresee the fiscal benefits of infrastructure. In reality, for most projects, it is possible to earmark the flows that are direct consequences of the project. Another myth, evaluation social cost benefits is sufficient. No, you need to evaluate the full fiscal impact, and this can be estimated, and then after you will have decision. The challenge lies in the fact that while project costs are typically well understood and the socio-economic analyses are usually properly performed, the fiscal revenues are collected at the national level and not at the project level. So the expenses are well known at the project level, but the revenues are better known at the project at the national level. And this is why you need an economical study to link the consequences of the project at a certain point and the fiscal revenues. Then, last point, inaction is not a cost. And you can even say that the most expensive infrastructure is the one that does not exist yet. So why is the GLOPRAM now? For fiscal return evaluation, when you look at the process used by World Bank, IMF, and many other bodies, they are concentrated usually on minimizing construction and operating cost. All the process about tender optimization, value for money analysis, and so on are focused on reducing the cost. Also, the socio-economic impacts are assessed properly before implementation for making decisions, and often after implementation for evaluation of the results. However, they usually overlook the evaluation of the project-related fiscal revenues, such as measuring the net cost of the work. What is the net cost? There are payment credits minus tax paid back to the state by the contractor and workers. In the developed country with the heavy level of tax, like in France, you will see the level of the amount of the money which come back to the state. Second point, the medium long-term direct impact on the project on the GDP. What is this? It is a fiscal effect of the positive externalities, which means that to evaluate that, you need to know properly the positive externalities, then have a socio-economic study done in detail. And then the last point is more general. The additional economic activity created by the production factor cost reduction, either directly, like the time saved, we shall see after, or globally, when you increase the efficiency of an economic system, like a city or a region, it gives opportunity to firms to come and develop more business, which creates more fiscal revenues. This is well known at the regional level, but I think it should be looked at the project level. So a scheme is easier to understand than any verbal presentation. Here we have taken the example of a concession during the operation phase. phase, what happens? First, the concession provides a service. This is the vertical gray arrow on the right. The operator provides service to the user, and the user pays the SPV. And this is the core business of the concession. But with the money, what does the SPV? The SPV pay taxes to the finance ministry, pay the operator to run the business, repay the lenders. Usually lenders like to be repaid. And lastly, the investor, local sponsor or international sponsor, if there is enough cash flow in the business. You know this absolutely by heart. There have been tons of documentation contracts on that. I pass to the second slide. The second slide is the missing link, the blue arrow that you see going from companies, taxpayer, final user to the finance ministry. And in more detail, all the red arrows are representing the tax flows from the contractor, from the operator, from the investor. I didn't put the arrow because it would complicate the sketch. From the final user, from the taxpayer, obviously, and from the companies. So the idea is to evaluate this amount for a given project and not to wait at the national level after a certain number of years to see how much money came back to the finance ministry. The economic studies give the possibility to evaluate each one of these red arrows. So to summarize, GLOPRAM work as a complement to a cost-benefit analysis. You understand that it is clearly the start point, the starting point. The environment analysis, obviously, which is symmetrical, and then evaluate the increase of GDP due to the project. And once you have the GDP, it is rather automatic to have the fiscal additional resources. So if we compare with the PFRAM, PFRAM aims to estimate a PPP project macro fiscal implication based on a limited amount of information, typically included in the project financial model and the analyst assumption. As a result, it gives a broad idea about the potential fiscal cost and risk of a project. But it doesn't assess the viability of the project and doesn't give information of what is positive for the country if the project is a good one. So GLOPRAM aims to help to understand the positive aspect and should be used as a complement to cost-benefit analysis and to PFRAM 2. Why it matters now? It is rather clear that when a country has an infrastructure, usually maintenance is not at the level at which it should be. And infrastructure stock is aging. In other countries, the problem is lack of infrastructure, which impedes the development of the country. The constraints, public deficits and public debts are rising. I hear that since I've beginning working 50 years ago, but well, someday it will create real problems. And there is a critical point, which is what Mark Carney calls the tragedy of the horizon. What is that? It's the fact that the decision maker's horizon is short, and the projects are long-term projects, and the benefits are measured after 5, 10, 15, 20 years. And the decision-making horizons for business, maybe it will be 3 to 5 years. For politics, it varies from 2 weeks to 20 years. For technocracy, it can be considered that after 5, 6 years, the people and the policy have changed. And it is all this is too short for properly taking decision, taking into account the fact that the benefits are spread over many, many years. Last point, the funding and proper evaluation of budgetary impact are crucial because budgetary impact changes dramatically with the type of contract. It is all these discussions between a PPP or traditional procurement. We shall also see this in a few slides. So the net cost, what are they? Budget expenditure minus tax revenue. Budgetary flows depends on the type of work and of the company. If you are in developing countries, you have local workers, you have foreign workers, you can have equipment which has been manufactured locally or in other countries, you have custom taxes, you have formal or informal sector, which may be very important in many companies. The informal sector brings activity, but not taxes to the budget. The energy, and finally, the type of financing. Example, in France, it is, I believe France is a little extreme, but anyhow, for a budgetary expenditure of 100 million over a relatively short period, I mean 3-4 years, the time the works are completed, the state recovers 55% of this expenditure. So the true cost, the additional debt, I would say, is only 45 million, although what is announced by the minister is 100 million, and what is signed between the line minister and the contractor is 100 million. So the next one, if it goes well, yeah. The breakdown of a road maintenance cost. We have, I have had the opportunity and the chance, the luck to work with on the road network of Abidjan. In the framework of support given at that time by the MCC to the Ivory Coast. So, what about the costs? Work cost and VAT. You see on the top left, the VAT is an important part of the cost. And when using Piron, I remember very well having had this discussion 5 to 6 years ago. Should the VAT be taken into account in the Piron or not? And there was hesitation, but clearly it has not to be taken into account because VAT come back immediately to the Minister of Finance. You can see, we shall not go in the detail, but the allocation, the distribution of the local spending between wages, energy, fixed asset, and so on. So with this analysis, you have a better view of what happened to the money which has been put in the economic activity through the contract, the infrastructure contract. Now, if we go to the operation period, Another example, it is a transport project. It is an improvement, we shall see the number, improvement of an existing road. What such kind of improvement is selling? It is selling time and nothing else, a little comfort, but mostly time. So the real question is, what happens with the time which has been saved? What the people will do with the time they have, in addition, instead of being transported, of having this time for them. Additional welfare, this is evaluated by the economical studies. Additional efficiency of transport system brings additional accessibility. This is well known since half a century, McFadden theory. It is also economy. You can say also that the beneficial effect of having a system working better due to a better infrastructure network created a certain amount of additional activity. This also has been documented by the economists. We have taken 1% of the time saved each year in addition to the simple benefits of the time saved. And we come here to what happens to the time saved. Post-COVID studies show that, at least in USA, 44% of the travel time reduction have been allocated to additional work. So, additional paid work, I have assumed. So this goes directly to the increasing of GDP. If you combine economy and budget, you see that this 44%, you have to take only a part of them because there are formal and informal works. So in our example, I've taken only 50% of this 44% as increasing the GDP. And then budget, fiscal rules have been applied, but only to additional formal market activities. All this precaution to say that the number I will present after are, I would say, rather on the safe side of the hypothesis. So what are these numbers? We have compared 10 possibilities of contracts. We examined the results over 20 years with a discount rate of 3%. In the Ministry of Finance, it depends. Some, or IMF, some are discounting values, some other not. For instance, the Fiscal Department never discounts the values. In France, the French Treasury discounts the value. So I've taken the most sensible hypothesis, which is that the money coming in 2040 is not the same as money coming into the budget in 2025. So it is discounted. So you see immediately that if the scheme is a tolled one, the cost, sorry, I start by the columns. The cost in red are obviously negative. In my sign convention, red is minus. And you have two columns, the line ministry credit and the real cost for the budget, which is above the line ministry credit because the country is indebted and it borrows, in my hypothesis, it borrows money to pay the credit to the enterprise. The last column on the right is the budgetary balance, revenues minus the cost. And you see that in my hypothesis, they are all positive. If it is tolled, clearly the result is very, very much higher than if it is toll-free. This is quite normal. And it should be the first question when doing an infrastructure, should it be tolled or not? You see that the worst situation is delayed by 3 years. And if a project is good, they lose money in not doing it. And the best solution, in fact, is never done, or according to my knowledge, my experience, sorry, it is a design, build, operate, and maintain type of contract. But we stall. The fact that it is fully paid by the state, it doesn't impede the state to put toll. And this, you have the maximum efficiency according to the statistic on the difference of efficiency of the various type of contracts. So, let's go to the next one. A case study to make things practical. So we come back to the MCC funded project to maintain and upgrade roads in Abidjan. What has been done first, detailed of existing situation, then using HDM4 and another software called L2R, which is coming from the French laboratory of roads. The two software was used to select the best, the most cost-effective maintenance strategy. And after, we try to evaluate the economic impact. In fact, the two strategies were compared with a different cost and different effects. The effect is that there is more or less potholes in the network. If you have potholes, it reduces the speed. If it reduces the speed, you lose money. And then with this, you can compare spending more and having less potholes or not. The figures will be shown at the next slide. This is the results coming out directly from HDM4. The one scenario, it was in CFA. One scenario was 170 million, the second one 195 million, so a difference of 25 million. But in fact, when you make the full calculation, you see that the best scenario is a scenario 1, so the most expensive one, and it brings additional revenues for the states. So the maintenance is not a cost, it brings money back to the budget more than its cost. If you discount, obviously the figures is not so high. You go from 67 million to 22, but it remains positive. So the conclusion is what? Don't look only at cost, look first at what it will bring back. The Piron 2 is concentrated on potential fiscal cost and risk associated with the project. Piron 2 is not done for justify economic or social relevance of a project. So, in response to this limitation, the GLOPRAM approach aims to provide decision makers with information on topics that the PFRAM doesn't address. Specifically, it focuses on the potential economic benefits of a project and estimates how much these benefits could contribute to GDP and subsequently to additional revenues, mitigating or fully compensating the project costs. The methodology is the last one. Don't be afraid. This methodology has been validated by the French Minister of Finance, the treasurer part of the French ministry, the Cour des Comptes, after having developed with academic and private sector support. On the website glopram.com, you have the academic paper, and it is possible to use this approach. Model is one thing, methodology is more large of the same idea, to use this approach with various infrastructure sectors. So I think that we can, if you have any question, don't hesitate. Maybe I will be able to answer. It is not true. And go on the sites glopram.com or the other site pironconsulting.com. You will have the academic documentation of what I've done with the University of Nice, with the University of Cergy and Strasbourg.
Okay, thank you very much, Vincent, for this presentation. Are there any questions? There is a comment in the chat.
Maybe I can come in, and I do see the comment, so maybe that colleague also can come in. So thank you very much for the presentation. I didn't present myself, so my name is Çiğdem Aslan. I was the division chief for one of the PFM divisions in Fiscal Affairs Department, but now I'm at the front office of Fiscal Affairs Department, but of course still interested in infrastructure topics. So my question is the following. Indeed, it makes a lot of sense to look at the net income from the project. So how is this GLOPRAM used? Because you mentioned a project in Abidjan. I understand it's already deployed in some of the companies that undertake infrastructure projects in France. So what is I'm just trying to understand the business model. Like, is this a software that you develop, some consultancy that you deliver? How does this work? Thank you.
I'm trying to answer. I say I will try because the sound is not so good. I'm not sure that I capture all the subtlety of what you said. How does it work? You start from the socioeconomic analysis, but you start from a detailed socioeconomic analysis, looking at what happens to the users, to the population, to the firms. What are the benefits for each of these one? And after you look at the money flow which is involved for each one. I am sure that I've answered your question because yes.
You couldn't understand. Okay. Can you hear me well now? You cannot?
Yeah, it's
can you?
Better,
okay. Yeah. Okay. Wonderful. Okay, so I will repeat my question. So I do understand the methodology, and we may have more detailed questions. I'm sure my colleagues may have more questions about the methodology. But my question is more about the business model that GLOPRAM has. So I understand this is a combination of a methodology combined with consultancy. You mentioned that you worked, for example, in Côte d'Ivoire in a renovation project. So my question is this something that you do you work with governments? Like, what is your business model? Do you sell the software? I'm trying to understand how countries, if we were to recommend such an approach, how would countries be able to use your services? Thank you.
The project has been developed for two specific. The software has been developed for two specific projects. The first one is Abidjan, and the second one is how do you call that? Les crèches, the
Child care
oui,
center.
child care centers. Yeah, and in each time I've made socioeconomic studies, specific socioeconomic studies. For the child care center, I do this, I would say, on the request of the municipality, which was interested in the methodology, to see if it can apply to many other projects in France. And in the case of Abidjan, it was the contract with the MCC. But it needs time to understand the project, even having a good socioeconomic study. So the way to use that is simply to get in touch with me and explain what you need, what you have, what the documentation you have, and then I can make a proposal of working once I have understood what is the topic. It is not a standard software like Excel or Word. It is something which is new. It is not as developed as Piron, because Piron is simply an Excel file. Mine is more complicated because you need to link accounting and socioeconomics. So it is handmade, it is not automatic. But if you get in touch with me, I can see if I can help you in any way, or contact or team up with the engineering office to have something consistent. And then I give you an evaluation.
We also have a comment from George Darido, which is about similar, I think, because he wonders about the additional data needed to reasonably estimate long-term fiscal impacts in LMICs are difficult to find out, especially in LMICs. So there is probably an investigation like the one you did with HDM4 in the specific case of Abidjan on a maintenance and rehabilitation project. I think each project needs its own research of relevant data to be assessed to evaluate the long-term fiscal impacts.
The idea is that there are not so many type of projects. You have transport project, which is a family for which the main aim is a time saving, and there are enormous documentation about the consequences of time saving in the academic literature, which is seldom used by engineers, but it's a pity because it does exist. What should be looked at, but it is often the job of fiscalists, is the link between GDP and the revenues coming from the fiscal laws. Here also you have literature, but not from academics, from the people who are responsible for the budget. They have plenty of information. So if you collect the information where it exists, and just ask people to work together on that to check the consistency of the information, then you have information which is not which may be quite useful. It does not yet been done systematically. Also, on some projects, there are ex post analysis. And starting from this ex post analysis, you can have a confirmation of the GLOPRAM process. But I agree that if World Bank, for instance, or IMF could systematically collect the necessary information to make a kind of repository of information, it would help the development of the use of this methodology.
One question?
Yes, hello.
Michael?
Yes. How are you? So thank you so much for the presentation. So my name is Mikel Tejada. I work on the infrastructure finance department at the World Bank. I mean, I know George and see them. We are a part of the department who, back in the day, with some other colleagues, developed PFRAM. So I just wanted to make a comment first and then a question. The comment is, and I mean, it's all good. You know, actually, it's great that you take PFRAM and that you use it and you try to complement. And actually, I agree with part of the philosophy of this idea that of bringing up the benefits of what infrastructure projects bring to the table, right? The comment I want to make there, just to make sure everybody understands, is that PFRAM intentionally does not do that. So it was never an overlook. It's an intentional reality of PFRAM, and part of it is, and this is going to be related to my question after. Part of it is because PFRAM assumes that you have already done very full-fledged developed cost-benefit analysis that accept that the infrastructure that you're going to build is going to create benefits. Therefore, the government has already decided to build the infrastructure. And what PFRAM tries to do is to assess and identify the fiscal cost of doing a project through a long-term PPP, the commitments of which are not easily seen in the budgetary cycle, right? Just to clarify that that's the context on what PFRAM works, and that's why PFRAM focus on fiscal cost rather than on benefits overall. And then my question, which is then related a bit with George's question, is when you were explaining the case study, for example, in Cote d'Ivoire, at the end of the day, the results, that it's a question of reliability of results and generability of those results, right? The impression I got is that a lot of your results are dependent on the assumptions, not only on data, which, by the way, is much more difficult to get, particularly in emerging economies. Our clients do not have the availability and wealth of data that you may assume countries like in Europe have. But more importantly, and this is it's also like a question with cost-benefit analysis in general. How do you get to those assumptions, right? Like that 1% that you attributed, on that 44% that you said is time saved that goes back to work and therefore increase GDP. All those assumptions. The question is, have you tested have you done sensitivity analysis on those assumptions, right? How does it change if you actually change those assumptions, and to what extent that creates results that are widely different from the ones that you have? Because then the methodology becomes very, very dependent on the assumptions rather than on data on the methodology itself. So that was kind of my question, if you have done some testing around that.
Well, there are, I will answer in 3 points. The first point is that PFRAM is absolutely excellent for what is foreseen to do. And the socioeconomic analysis is the beginning of all. The second point is that there are a huge amount of scientific documentation about the time used. The 44% came from studies made in 2000 to 2001, I think, in US, after the COVID
21.
The COVID
Pandemic.
lockdown. And there was the survey made by the US Department of Welfare or something like that. I have the information. And they asked people, what did you do with the time that you have not spent in the transport? And people say, we have spent, we have taken more rest or with the children. We went to more sports, or we worked, it was 44%. So it is an example, but I am sure that in every country there are studies made by academics about the use of the time saved during COVID, or for any reason. And the 1% that I took is coming from the studies which are developed since 25 years by the academics also about what we call the wider economic benefits. The fact that you have productivity increased when the people can connect easily, mostly because they find a better job within a certain time, transport time limits. And you have a better adequation between the possibility of the people and what request the firms. And this better adequation gives an improvement of efficiency and an additional GDP. This also is documented in the literature, in the academic literature. So the result depends on this hypothesis, but there are many documents about this data, this information, not data, information.
Perfect, thank you. And thanks for the presentation again. I mean, we'll look into it and maybe reach out to you in the near future. So very happy to have participated.
But basically, when you come back to the idea of GLOPRAM, it's just to make working together economists, people from the budget department, and contractors, that's all. And people from lenders and investors. And today they are separated. The economists are speaking to economists. The people from budget, they are speaking between themselves, and investors are speaking with investors. And in fact, the GLOPRAM takes its role when just to make these people work having the same understanding of a project and working all together, each one bringing his piece of experience, piece of knowledge, I would say.
Understood. Thank you.
Any more questions? Okay. If not, I just want to mention that CICA, the association I mentioned earlier, Confederation of International Contractors Associations, will have their General Assembly end May in Washington, D.C. We plan to have some meetings with World Bank representatives, namely Nicolas Pelletier for the transport practice, but other people as well. And if you have some question that you would like to forward to Vincent, please do not hesitate to either send him your comments or question directly, or possibly take the opportunity that some CICA people will be there end May, and you may want to forward your questions also through these representatives. Again, this session has been recorded, and do not hesitate to contact us if you want to share this presentation with other colleagues that might have been not able to join today. Thank you very much for your participation, and we are looking forward to hearing from you. Again, don't hesitate to contact us. Thank you very much.
Thank you, and bye-bye to everybody.
Thank you.
Thank you. Bye-bye.